I'm surprised. Okay. Okay. Got it. View emit all. Okay, there we are. Hey, everybody. Little technical issues. Sorry about that. Where are we? And we're going to, we're not going to be able to live stream that. We'll just turn that off. Technical issues. Sorry, guys. Let me try one more time. Let me do it or not. We're going to find out. Doesn't look like it's going to happen. Okay, good. Well, hey, here we are. My name is Bill Gross, and I'm your substitute teacher today for Annabelle Pacheco. This is our Wednesday afternoon, 2 p.m. Pacific, multifamily investing, how to get your first multifamily deal. And Annabelle Pacheco is literally in an airport right now. She's flying to Miami. And so she asked me to fill out. I'm the person who helped set her up on this process to begin with. And so here we are. And I thought I would reach out to you guys and offer an opportunity to talk about multifamily and share with you really, here it is the last week of this call for 2021. And my goal was to get my first multifamily investments done. And I partially got it done and partially didn't. I'll share with you what I got done this year and why. So first, just want to say hi. Hey, Patricia Castillo, how you doing?
Great, Bill. How are you today?
Fantastic. Let's see. Any other familiar? Nobody. Oh, there's just anybody else? I see Rafael Bravo. Welcome. I don't think we've met before, have we? Ready? I don't know who you are. We have somebody connecting. CC, welcome to our call. And Nicole Kelly, welcome. And Sun2C's iPhone. Okay. Well, welcome to everybody here. My goal is to make this interactive because the more you participate, the more you're going to get out of it, the more I'm going to get out of it as well. So I want to share with you guys, my name is Bill Gross. I've been in real estate. Well, first I'm joining Rafael things at work, but no meeting, it's on this meeting. Good, Rafael, welcome, good job. So there's different ways to approach this particular meeting and this particular niche. Multifamily property can be a business if you are a wholesaler investor, where you make your income from doing this full time, or a real estate agent, where you find properties to sell or find buyers who want to invest. But it also can be a part-time hobby or part-time endeavor for somebody to make income while they have another business, another job. I fall in that category. Personally, I'm a real estate professional. I spend all day long helping people sell houses. I'm primarily a listing agent. I work with attorneys and estates and homeowners. I'm selling property and getting top dollar. And I make good money at it. And at the end of the year, I invest money into building my wealth. And hopefully then those dollars work for me while I work next year and make more money. And so my goal I set out this year was to make my first multifamily investments. And so I really set out for 3, and I thought I would just show you guys what those 3 were and kind of where I came. Now, you may have previously heard Annabelle Pacheco's story on her first property. And she talks about how she was a real estate agent in California, but she researched the idea of buying property out of state. And so she set about to do that and did the research. She speaks Spanish, which I think helps to a degree, for her at least. And as a result of that, was able to buy her first multifamily. And she's recorded that on her YouTube, where she took a property and bought it subject to a seller carrying back some money, invested some capital, improved the property, raised the rents, and made about $1 million, I think $1.2 million when it's all said and done on the investment in a couple of years. And she kind of did that part-time while she continued to sell real estate at a high level. So that's one approach. Now, I live in California. I don't speak Spanish. I don't have the time to travel with COVID and family and such. So my goal this year was to invest in multifamily passively where I find people who found the property, do the improvements, fix the property, manage it. They just take my money and give me return for my investments. And so I think one or two of these we've had on this call and walk them through, but I'm going to share my experience with it. And so you can learn if you have money to invest or want to make money next year to invest at the end of the year. So you can do the same thing. So my plan was to invest a total of $150,000 in 3 different multifamily investments. That was my plan. I had that money set aside. That was my plan, was to earn a certain amount of money this year, which I did with the extra savings I had, to set aside and invest in about $150,000 in multifamily. And I decided to break it into 3 different investments, money that I could put aside for 10 years and not need it as long as it worked for me. So the first one I came across was Grant Cardone and Cardone Capital. Now I know Grant Cardone as a real estate salesperson and a motivational speaker. And I actually knew him when he had a house to sell in Los Angeles. He was an expired listing. I called one day and unfortunately I wasn't able to get the listing. But that's how I met him. I started reading his books. He's his style doesn't really appeal to me in some regards, and some regards does. He's a very committed family man and father, which really excites me and interests me. It's a little gruff, my styles, but I think he's working on those edges. But he's made a lot of money investing in multifamily properties. His typical property, this example, he's calling it 10X Riverwalk. 26 stories, AAA location, AAA amenities, 94% walk score, 97% occupied water frontage. This property is in South Florida. And so it's the kind of thing where you go on, you can look about the property. He has different properties. One is Los Olas Walks, which is in Fort Lauderdale, Florida. 456 units, large property, high-end quality property, targeted internal rate of return. This means how much money you would get on your investment. If you put in the bank, you expect 15% from this investment on average over the years. And target equity multiple of 2.5 to 3.5 times. So you put your money in, $100,000, you're expecting to get back $250,000 to $350,000 at the end of maybe a 10-year period. That's kind of this program. Now, when you're an investor, you log in, ready to invest. And so here's why I actually went to Florida, met his team, participated with his team to a degree, and as a result, got into investing, learned a lot about them, felt very comfortable with them as a result. I'm not going to go into this because from a security point of view, just probably not appropriate. But basically, he breaks down the details and the numbers of this investment. And he offers investing to 2 types of groups. And this is an important thing to know. There's accredited and non-accredited. Accredited investor is somebody who, think of them as higher income, as defined by, if you're joint income, $300,000 a year, last 2 years tax returns. If you were single, $200,000 a year, last 2 years. And then, or a certain amount of assets, $1 million of liquid assets you can verify, stocks, securities, and bank. So I just don't quite hit those numbers. I would if I filed my tax returns for 2021, or I would if the property I have in escrow closed. So in January, I'll probably be accredited. So what I liked about them was they have a non-accredited option where you can invest as little as a couple $1,000 up to millions. So I went into this program. Actually, what I think I'm going to do, I'm going to stop the share real fast. I'm going to log in. How's that? And then I'll show you the details. I want to walk through and show you why I'm investing this. Now, if you have questions along the way, feel free to ask them anytime. And I will tell you that when I was in Florida for a week in July, I was really impressed with his organization. I was really impressed with his team. I was massively impressed with his knowledge of the market. And as a result, felt comfortable making these investments. Okay, so investment documents, non-accredited offering, pending, investment profiles, overview. Where is the, here we go. Okay, so let me go back to sharing. And these are his non-accredited offering summary, overview, investing in 4 different properties, over 1,600 combined. So you're actually investing in 4 properties he is developing. in Fort Lauderdale area. One of them is 10X Riverwalk, and then they're showing other properties that are similar. And then they go through the numbers in this booklet here. So let me show you. These are the legal documents, very complicated. You should read them through. I did, but I want to show you the flyer. No. There we go. This shows you the project. So this particular project is 2020 built, so it's newly built, 26-story high-rise, 260 units. Average size is 93 square foot unit. Total square footage, 234,000. It has 11,000 of retail, which is a common theme you're going to see in high-end properties nowadays. It's already 97% occupied. The market rents are 2,600 or 290 a square foot. There's 395 parking units. So you can see you have 260 units, 395 parking, so not quite 2 per, but a good number. 1.5 per bed, per unit, and 1 per bed. And it's a walk score of 94, means it's in an area that's very walkable. And so he encloses in here a map that shows you where the property is and what's surrounding. I used to live in Florida, so I'm pretty familiar with the layout. And then some beautiful pictures. Of course, they're going to show you the high quality pictures. Nice pool. I'm a swimmer. I'm not going to live there, but it still looks nice to me. You can see the level of the decor of the units. This is the rec area, gym. And then the general location. You can see it's on the water. And how many different amenities are nearby, bars and such. Fort Lauderdale is a hot area. And the Riverwalk is an area along a river that goes out to the Intercoastal Waterway. And you can see the view of and where other major properties are in the area. And you can see looking to the northeast, it's on the river facing towards now we're facing towards the ocean. And view south, so Miami-Dade south of here, and west. And then the property, and they're going to show you the different community features. But really what I wanted to go over and why I open this up, that was beautiful, is the numbers. Here we go, financial summary. So year one, they have the potential rent. They expect some people aren't going to pay. So you have some vacancy losses, some concessions. You have a model that employees are going to live in. And then you have income and the different types of costs, and then your other expenses. And so the net operating income is how much they expect to end up net to pay any financing or investments. And the cap rate is 4.3%. And each year it changes, raising up to 5.8% at the end of 10 years. You can see for reserves, which is really important. And then they recalculate, and then they have a debt service. So the property has a positive cash flow of $2.479 million the first year. He takes a management fee. So this is how much money you have left over, cash flow. So the fund's cash on cash is 6%, investors' cash on cash after the management fee is 4.8%. So it'd be the same as putting money in the bank and getting, if all things worked out, 4.8% interest year over year over year. And then you have at some point, it starts to rise because your rents are going up, your expenses are somewhat stabilized. At the end, they refinance and you get some equity out at the end. And so he's saying at the end of the 10-year period, your net internal rate of return is 14.5%. So this is the kind of thing where it's not a home run. It's not like buying Bitcoin. It's not like I'm buying tech stock, but it might be better than buying the S&P over a 7 or 8 year period. That was number one. Any questions on this? I don't see any questions or hands up. No? Kirsten, you have a question or just unmuted? Mute her. Okay, if you have questions, put in the chat box. You're 5, he refis, correct. Why not sooner? Everything has their own strategy as to why. I think they're still improving the property over time and kind of get the top rent and the capital expenses behind them in year 5. And that's where he does the equity factor in year 5. But that's his strategy. Does he take refi money and pay out to investors? Yeah, you can see here that in year 5, there's a fund cash flow, and then the investors get a percentage on that. You're getting, I think the way he funds it is 70-30. 70% goes to investors, 30% is to management on this project. And again, I'm paying a premium here, but I'm only investing right now for me an amount, but I'm also learning from him. I'm also being involved with his network. I'm also, I'm a real estate broker. So if I find one client while I'm associating and networking with those investors, basically I would pay for my commission, would pay for the whole thing. Well, you have a massive hurricane that wipes out parts of Fort Lauderdale, though there's insurance. You have a massive tanking of the economy. Florida's been on a run, but that could change. Any number of things. You have wars, depressions. But I think everything is subject to those things. I feel this is a better place to put my money than some of the other places. Good question. Is 50% too good to be true? No, I think his track record shows that. That's what I've seen. And I think overall, rents in this market are scheduled to continue to increase to outpace inflation. Basically, you have a loan that's kind of locked in rates for 5 years or so, but your rents are going up every year 2 or 3% or more. When you have replacement of properties, it can raise it even more than that. So of all the investment classes, some I don't really understand, some I do. In real estate, what I see is more people want to live the rental life than the homeowner life, and more middle income and upper income single engineers at Google willing to live in a really nice apartment and pay $3,000-4,000 a month, more of those than ever. And good question, Freddie. Isn't the rule of thumb 4 to 7%? I would say 4 to 7% for the cap rate. Even that's probably a little high, maybe 7% in high cash flow areas, 4% might be a little high in LA and Orange County. But again, this is factoring in the fact that over time, he's expecting the rents to continue to increase, and he has a track record to do that. And the 15% is, if the property increases in value, think about it. All these properties have increased in value in the last couple of years, 15-20% or more per year. So this is assuming that as a result of the income going up and it being a stable project for 5 or 10 years, that it will appreciate, including that amount of money, it can appreciate 50% in 10 years. Look, good questions. I think you have to go into details and look at it. I'm summarizing for you. I've spent a week with Grant Cardone's organization, looked into it very closely. I've read through all the documents. I'm not suggesting you invest with me without doing it. You might want to check it out. You might want to put in $1,000 or $2,000 to start. And I think you should. You should be skeptical. And another answer question you asked, these are great questions, by the way. Can you put your money out sooner? Now, this investment, I'm agreeing to tie it up for as long as 10 years. Now, if before that he sells it, he pays back the investors, I get a nice share in profit, but I can't pull my money out. This is money that I'm planning to be there for at least 10 years. Great questions for you. I should have, too bad you're not asking questions live verbally, because this is exactly the kind of interaction I think that makes this call more interesting. So to summarize, Freddie's bringing, I'm sorry, Patricia, do you have a question?
I did. Yeah, I didn't want to interrupt you. I was just curious, is there a minimum that you can invest in one of these, projects through this specific investor, Grant Cardone Capital?
Yeah. So every investor has their own numbers, and those numbers are subject to change. And I want to say it's $1,000 minimum.
$1,000. So let's just say, and I don't know if I haven't looked at any of that information, and I don't know if you went into that detail as far as a minimum, but let's just say, hypothetically speaking, somebody invests $1,000, today, tomorrow, and they park it there for the next 10 years. what would that look like and as an estimation at the end of the 10 years?
Well, again, we went through the numbers at the bottom here. So he's expecting at the end investor cash flow.
Oh, the 12% or
This is the internal rate of return of 14.5%.
okay.
And so year one, so at the end of year 10, there's $35 million total invested, and the property is sold in year 10. And the total investor's cash flow in year 10 ends up being $77,000. So you end up more than doubling your money over a 10-year period, right? You're getting about 4.8%, 4.2% the next year, 5% next year, 5.2% next year. Then you're going to get a nice chunk in year 5 in the refinance. And then again, the property now has a lower leverage, has stabilized its income and expenses. You're going to get a nice rate of return in the out years. And you average all that together and you end up about 14.5% on average, and probably between, if you put 1,000 in, you should expect back, based on these numbers, $2,500 to $3,500.
Okay.
Not a home run, but for me, another reason why I did it with them was I wanted to learn from him, and I'm investing in another project at the same time.
Yeah, I think it's a good idea. Just, I mean, if you don't have a lot of money to invest, but maybe you have some cash, even a couple of thousand, it's a good way to get started and invest it somewhere.
Right. So I committed that right away. And then I think he also has a program where I think if you invest $2,000, you get a free ticket to one of his live events. He's trying to build a network. I think the thing that I find exciting about this is most of the projects require accredited investors, which means people who are worth $1 million or more, or income per year, or families $300,000 a year. He's trying to build something more for the masses, more for real estate investors, new investors. I find that exciting. That's the world that I live in. I also think I could bring people to this program. Not now, I'm not pitching you guys, but at some point, maybe my business is helping bring people to this and getting some of the commission dollars somehow, or similar projects. And also meeting people who invest in these and doing other projects with them. That's my goal in the long run.
Okay, thank you.
Sure. And let's see, where's the chat? You think it's too, okay, so Freddie says, I think it's too cocky for me. It just scares me, just as you were saying earlier. I agree with you, Freddie. Again, there's some stylistic issues. He is not the way I was brought up. But again, I felt less that way being with him for a week, watching him interact with his wife and kids when nobody else was watching. And just knowing that's his style and how he grew up, and trying to be more accepting that people are different. But I can appreciate that. And I'm not saying you should invest with him. You should definitely feel comfortable where you put your money. Okay, so that's one. Second deal I put money in, Cloud Capital. Can you guys see that? No. Okay, let's share that screen.
Bill, hi, Bill. This is Renisha. Before you move on, a quick question for you. So I received the information from Grant as well, and I was actually looking to do it, but I thought he received an email that said he was oversubscribed. Is that inaccurate?
He's oversubscribed for accredited investors on one of his projects. He closed.
Oh, credit investors.
Accredited.
Okay. For uncredited, is that for the last walk? I think.
Right. So that's just one project, whereas the non-accredited investment is for his next 4 projects. So what he's doing is raising money for his unfunded projects as well. So he closed out the bigger program for one particular investment, but the accredited investor program is really over multiple. You're buying into a group of 4 buildings. I just showed you the numbers on one of them.
That's only for accredited investors. So you can't invest with him anymore if you're unaccredited. Is that what you're saying?
If you're accredited, that one program is raising funds for is closed out. He's now raising money for his next project. If you're accredited, if you have 50,000 or more, and you're an accredited investor, then the Las Olas, I think, is going to close, and now he's working on his next project. If you're not accredited, you're going to invest less than $50,000. You're not buying one project; you're investing in his next 4 projects.
Okay, gotcha.
So one closed out, but now your money's going in the next couple projects. You're kind of, it's more like a mutual fund.
Got you. Okay, thank you.
I don't want to be necessarily an advertising program for Grant Cardone, but my money's where my mouth is. I've invested Nexus Cloud Capital. They also prefer accredited investors, minimum $50,000, but will allow non-accredited if there's a relationship and such. They invest in Texas in particular, which I like a lot. And this kind of describes their whole process. But the thing about them, Chris DeSell was on this call a couple weeks ago and walked through this project in detail. The 506 South project was the one that we saw. And let's see if I can find the numbers on that one. Is ones where, okay, so I'm going to log in 1 second. Oh, I haven't shared the screen there. Okay, so let me go ahead and invest. Okay, so this one's a little different. Personally, this is 506 South Apartments. He talked about this project online, this call a couple weeks ago in Webster, Texas. I put in $50,000. Target cash on cash 7 to 9%. Target IRR 20%. 3 to 5 year term. So a little different. And so let me show you the key highlights. This is an off-market deal. 180 units near Houston, just outside Houston. And what I like about this is the investor puts in 30% of the equity themselves, the people who are the sponsor. And so I'm investing with people who have their own money in the deal. That's really important to me. And they got it off market, and they negotiate a purchase price. They're going to put money into it to upgrade the quality. And this is an area they've done a lot of business in. And so let me see if I can find the financials here real quick. Here we go, 506 South. So this was on this call a couple weeks ago. You can see this is not the same high quality property. Right? I would call the other property more of an upper middle class. I would call this more of a solid middle class to blue collar area. Houston, a little different than Fort Lauderdale. And the highlights are they expect 8% cash on cash, 23% rate of return overall, averaging 26%. And you would multiply your equity 1.78 times in that 5-year period, 3-year period. And so you can see the distributions are the expected year one for $100,000, you'll get $5,000 back, about 5% return. Year two, you'll get $10,000 back, about 10% return. In year three, you get $9,300 or 9.3% back. That's how they're expecting the cash flows to be. With you all, he provides a real detailed market analysis comparing this property to other ones. And they go into a lot of detail about Houston, which is a great market. Again, you can watch the prior YouTube where Chris went into these details. And here's where he goes into the numbers. And they're estimating for $100,000 invested, you get $24,000 in returns, and then a dividend return of $54,000. So you'll get $178 returned on your $100,000 estimate year three. So in my mind, it's like buying a stock at $100 and then 3 years from now expecting to be at $178. Or buying at $10 and expecting it to be at $17 or $18. So the things I like about this is I happen to have spent time talking in depth to Chris. I love their style. I love the market area of Houston. I love that this is solid, right in the heart of that market. I think is appropriate. It's not higher end than that market is. And the numbers make sense. They come in, they fix it up, and we get a nice return. And then for me, the Grant Cardone money is locked up for 10 years. This money is locked up for maybe 3 years to 5 years. Okay, I don't see other questions on this project. No?
So you mentioned that there was a relationship they did non-accredited investors. Then do you know what the terms are for that?
I would say that, because I'm not offering this, I'm not a salesperson, I'm not giving you a referral fee. I don't even think I'm getting a Starbucks card if people invest. I'm just doing this because I want to help. And I'd like to find investments and develop my client base. But I would say, if you're interested, talk to Chris DeSell. He's an investors relations person. He did an interview on this call a couple weeks ago. Great guy. And talk to him, and he can go through the details what that means.
Okay, great. Thank you.
It really gets down to if you're an appropriate investor for the project or not. That was for me, number 2. Now, the next one I did invest in, and I'd like to with them, and I'm not able to yet, because this one is only for accredited investors, Multifamily Investment Club. And they had a property. And again, Sam Newell was here talking about the Terrence Hill project that he did a call with Annabelle 2 or 3 weeks ago. They bought the property, and I like this one a lot, 310 units. I like El Paso, Texas a lot as a market. I've been to El Paso. I know the market pretty well. I like this group. Why do I like this group? In some senses, I would say even more, in that I happen to, of their key executives, I've talked to Sam, but I know one is strategic partners, 2 is strategic partners. I know them for a long time. I know them to be very successful, very shrewd businessmen. So when I saw their names, I got very interested to look into this deal. But again, the deal is only as good as the numbers. And so this property on Terrace Hill, again, the numbers really made sense to me. The challenge there is you have to be an accredited investor only. They use a third-party service. And so, whereas I can't just have my CP, I changed accountants. So I've not filed returns with my new accountant yet. So they can't sign anything until I file next year. So I'm kind of in between being able to be accredited. If I was accredited, I would put 50,000 in this deal in a heartbeat. If they'd said 75 minimum, I might have done that. I like this deal so much. I love El Paso. It's not as hyped up as, it's not as hotly grown as Houston or Fort Lauderdale, but it's a good, solid, good job environment, the best, I think, in the country. Really underrated. And it's got a good IRR. They're expecting numbers about 17%. So questions on this one? So you can see of my 3 projects, 2 I wrote the checks on and I'm in. As I finish the year, oh, hold on. Why is it only 3 years though? If I do like this, where you find 3 years, your investments. Okay, so Freddie, the thing about investing time, I'm sorry, Freddie, I missed your chat, so let me go back a little bit. So you asked about, can you do 3 year or less? The problem is that most of these investments, you're putting the capital into real estate, so they don't have extra cash laying around. If they target 3 years, they're going to make you commit to 5 because it might take 3 years and an extra 6 months or 4 years. So they're not going to commit. They're going to give themselves a couple years at the back end in case you're able to, in case it takes a little longer. They're never going to put themselves in a position to put the capital at risk or foreclosure. So in the case of the Cloud Capital, their plan is to improve the property, rent it up, stabilize it, and then the first opportunity is sell it. And they're thinking 3 years, but it might take them 5. So they're not going to rush out of it and sell at a loss. You think, and then so Freddie says, I think they lure you in with above average returns, and then you get average returns at the end. It just persuades you to get your money invested. You know, I think that's certainly a great concern, Freddie. You have to look at their track record, and you have to look at people who've actually invested with them and got the money back. And that's what, when I went to Cardone Capital, I met people who've been getting checks from them. Grant Cardone pays checks monthly, not even quarterly. So you need to find people, and the same with the multifamily club, the one that's accredited only. I mean, I know people who've been with him for 5 and 10 years, and they've been getting checks from him. So you're right. You have to be very careful, very leery of who these people are. check them out, do your due diligence. I do not expect you, as a result of my call today, to invest a penny. What you might do is start doing your due diligence. You start to get a check. Usually these investments, you're getting money quarterly. Grant Cardone does it monthly. So when the deal closes, the end of the year, you expect to get a check sent out March 31st or sometime thereafter, maybe April 15th. You get a check once a quarter. So it's a dividend. And it's taxed as dividend rather than regular income. One reason why I like that is I've been using my money to finance some flips, but that gets taxed as regular income. And in California, in my tax bracket, that could be over 50% versus dividends get taxed at a lower rate. They only get taxed at the end when they sell the property for the big amount. So again, most of these are quarterly distributions, but some are monthly. Okay, was this helpful at all or interesting? Yeah.
Yes.
Good.
Question, Bill.
Yes, sir.
One of the projects, I think the 3 years was refi and then pay out from the refi as opposed to cashing out total.
Right.
And I think they were going to go to 5 years to cash out.
Right.
Am I correct on that?
Right. The Grant Cardone was a 10-year project with a 5-year refi. And again, every company has their kind of ideal way of doing things and their market of investors. And they change over time in different projects. So the cloud capital is more of a, not a kind of like a big fix and flipper, but it's 3 to 5 years instead of 3 to 6 months, like in a single family house. They buy a dilapidated property, they come in, fix it up, bring in good management. If you listen to him, a lot of it is about relationship with the tenants and getting it stabilized, and then being able, rather than refinancing it, to be able to sell it. Now they might buy it out themselves, they'll get an appraisal and buy it out themselves, or sell in the market. So that's their strategy. Grant Cardone's is a longer term. He wants to hold on to capital. His goal is to raise a certain amount of money over time. So he has a different strategy or different preference, and you have to find the one that matches up with your needs, or accept several to diversify. Certainly, I would not put my eggs in one basket. I would only, at a minimum, want to have 3 different options. Good questions. Freddie has a question, or how much money do you get back from a refi investment though, please? Well, again, each of those deals are different, and I really want to be a little careful not to analyze them as I'm presenting the deal in detail. I just want you to understand the concept that they can refinance partway through, pull some cash out. If they pull cash out, they're going to distribute the percentage to the investors, 70 or 80%, and then they hold on the property until they sell it. And so they're all a little different. I'm going to be a little careful here that I'm not misleading you guys or presenting. I'm not pitching any of these properties. I'm not getting commissions on any of them. I'd like to, at some point, maybe next year, start raising money for projects as a business from appropriate people, but I'm not doing that today. Any other questions on this? No? Okay, so we're pretty much getting close to the hour. After 10 years, do they contact you and say, hey, here's your money? What happens at that point when you want to pull out? Yeah, at the end of 10 years, they're going to give you back your final distribution and return on equity. So depending on how much you're out, but you're going to be getting checks quarterly for the dividends. And then when they sell the property, they give you back your share of the equity. You can't pull out. These projects are almost all impossible to get your money out shorter than the time period of the project. So the ones Cloud Capital was 5 years, and the other ones were 10 years. So these are investments designed to be there for a period of time. Yes, Freddie. If they make less money, you're going to get what they make. Now, theoretically, along the way, you're going to get dividend checks that might be less than you thought also, which is telling you the rents are less than they thought they would be. Generally, sponsors write an annual letter, or if there's changes, a letter explaining, hey, the market's been tough here in Houston. We had a hurricane, we had a this, we had a that. So they're going to explain to you why the numbers are different so that you're not surprised at the end, because all of these funds they can only grow if they have happy customers. So we all can understand if there's a hurricane or there's a major pandemic or there's a war. And because we're also going to be getting less money in their other investments, theoretically. But yes, they can, if they make less money, they're going to only give you back what they have. If they're honest, if they're dishonest, they're going to take your money and run. Great question. Sounds to me, Freddie, have we met before? We have. Invest in real estate isn't guaranteed, and just invest in crypto savings account and collect 7% APY. So, Freddie asked, what's the difference between putting money in real estate like this or putting money into cryptocurrency? And there's currency savings accounts. I have a friend who introduced me to somebody who offers me 30% return per month. You put in $1,000, he's going to give you $300 a month. My friend's been getting it. Now, my friend's a bit of a promoter, so he's helped this guy bring in other investors, I'm sure. So I just asked the sponsor of that program, how can you get that kind of return? I get if crypto, goes up forever, you can do this forever. But what if, the appreciation, what are you doing that generates that kind of return? And tell me. Couldn't put it in English. I haven't seen anywhere. I understand the technology of cryptocurrency very well. I understand blockchain technically very well. I don't understand how a business other than a Ponzi scheme can generate those kinds of returns consistently over time, unless you want to say to me, hey, I know that Bitcoin's going to go from 48,000 to 100,000. Well, of course, if you know that's the case, everything goes up. This is you're investing in real estate. You can see the property. You know the city that it's in. You know the people there have jobs and are going to rent houses. You're secured by the real estate. I think the cryptocurrency is money moving out of dollars, looking for safe haven. And there are people who have $1 billion and say, well, I might as well take 50 million and put it in cryptocurrency because I don't know what's going to happen with the US dollar. And you put enough people to do that, it creates a big market. How long that continues, I don't know. So good question, Freddie. If you believe in cryptocurrency and you're going to get 7% a year by having money in a cryptocurrency savings account, that sounds like a decent return. I'm hoping to get more than that because the real estate I'm looking to buy will go up in value because of the natural forces of the economy over time, based on a track record. But yeah, no, I've looked at cryptocurrency, and I think when I tell people I've looked at it and not investing, they always look at me like I'm not knowledgeable. I don't know. Show me why it makes sense to you that any business can afford to pay those kind of returns. It doesn't make sense to me. What are they doing that generates that kind of money besides bringing more people into it? Okay, I think we're coming up on our witching. Or any other last questions, comments, challenges in real estate investments we can help you with? No? Okay, well, not seeing any. It's been a pleasure sharing with you guys today. My name is Bill Gross, and I work with Annabelle Pacheco. We are both with eXp Realty, and we do this every Wednesday at 2 p.m. Pacific time. We talk about real estate investment, multifamily out of state California. If you're interested, come on in. Reach out to me or Annabelle if you want to have more questions, more details, work with some deals. Let's do some business together. I appreciate you guys being on the call today, and let me know if I can help in any way. Thank you so much.